Sterling, euro, not a shocker there then. Now we have gone down quite a bit since Thursday. It was expected. I've told you this after we rejected this here. It's been a one-way street. We've been cuddled by the moving averages when we've had a little bounce back, but by and large, it's shanked and will continue to do so, I think. Yes, we're looking oversold on the shorter term, well, daily charts. I was going to say short term then, but if you go out across the other time frames, we're not looking so bad. Now I know the monthlies are long term, but the monthly charts have only just started to show bearish. They've only just turned off of the 90% area. Now that's important because although on the dailies we can trade euros intraday, when you see the monthly change, which we did, for March, you'd see that monthly change. That tells you that the big institutions, the hedge funds, investment banks, everything like that, they are aware of that. They are aware of the shift in sentiment. So even though we've seen 3 days, well, counting today, 2.5 days of the market going lower, you have to appreciate that bigger institutions stand back from the intraday moves and they only react when it becomes obvious that the market is beginning to turn. Now we've all said, I know not all who are on this group, but we've all said, I've said, I think the dollar's beginning to turn. It's been hit and miss, but it's doing it now. So as I've explained to you, when you're trading euros, you have to look at the dollar index. Now, as I said to you all along, this dollar index was basing, and base patterns take a lot longer to form than topping patterns. So we started basing mid-December. We're now in March. So remember that it's been like 3.5 months of base making. So now it's broken up. Now what we're going to do? Well, I'd like to see it go above and hold above 92.35, 92.78. You've got the 200-day moving average coming in at 90.73. Sorry, you've got the 200-day moving average coming in at 92.91. So you are seeing that there's a gravitational pull towards these higher levels, and you are seeing that people want to see the dollar index higher. You've got to appreciate where we come from. You know, we had all year last year of dollar weakness, where really there shouldn't have been dollar weakness at all. That's not how usually markets work in Forex. Normally, when you've got a world crisis, what you do is you go into the safest currency, which Swiss francs and dollar. You know, we didn't see that. We didn't see that at all. We saw the opposite. So maybe now we're getting to the point where the status quo has come back towards dollar positivity. So there's that. So we look at now currencies against the euro. So we look at EUR Sterling. It's not looking great. It retraced 38.2, but there is this here that is gonna pull the market down. That's 85.38. Again, if you go out towards, go back and back on the dollar, on the euro dollar, euro sterling, you can see where it's come from, and you can see if it does break that 85.38 area, where it will go. We double bottom down here, and up we went screaming where everybody was calling it parity. Well, we didn't get there. So this is going to be key, I think, to Euro Sterling, because if not, we're coming back down here, which is 83. We're at 85, 84 at the moment. Now, obviously, we take that out, hey, Euro Sterling is going to fall through the floor. So watch this 85.37 first, and then decide what you want to do with this particular market. Do you want to hold it and just run it lower, or do you think you ought to take profits? So let's have a look at Euro Swiss, because don't forget, all these markets, all of them, show a different story. But if you look at what Euro Swiss has done, okay, remember I told you about the big pole and then higher highs, higher lows, as stochastics have double topped. We have, more importantly, divergence in the RSI. So this is one that you could really get involved with, because the downside potential is really good. So, for example, if we break 110.50, let's do flip retracements on this, because I think they're quite exciting. So I'm going to take it from here, because from here is where I see the market making its bull run. So, I know you're going to get people take it from there, but I always take it from where the move started. So, if it goes straight down through 38.2, which is at 110.15, that tells you that that's going to go a lot further. Now, at the moment, we're staying above the 23.6. If you look at that 9-day moving average coming in at 110.50, you can see that this low here, right, Fridays, was 110.54. You take out 110.50, this is going lower. Everything's telling you it's going lower. Okay, so stick with it, because I think this has got mileage in it. The EURCAD, again, you've got to go far out, man, far out to look at it. Now, this is I like trading this, but it's a bit of a monster. Now, I said to you last week, this is the key area. Okay, so let's take the lowest point. So the lowest point here is that there, and that comes in at 151.17. You've got 150.94 and 150.53. We're trading currently at 150.69. We broke Friday. We broke Thursday, actually. So, where is it going to go? We can see where it's going to go if it breaks this. Okay? And it has. So, it can only go one way. Yeah, it's really, really oversold. But it doesn't matter if it's oversold. It only matters if it starts to turn from going oversold to beginning to turn to go higher. So stick with it. You've got nothing to lose. It could go back to its 9-day moving average at 152 and change. Could well do. But at the minute, it's below other critical support area. So you have no choice but to be with it. Be whatever it is, you need to be short with it. So you could either sell a bounce, you know, maybe to Friday's high. Have a look at that. Friday's high. So 151.78. So let's say that gets to 151.70. You'd be looking then on 151.60. You'd be looking to sell because it's not going to go above there at the minute. So we've looked at EURCAD. Let's look at Euro Yen. Again, see, look. Euro Yen has topped. It's going this little bit here. And I think if we go lower and we go back below 128.69, we're at 128.89 now. If we go back below 128.69, we haven't got a lot to hold us until this, which is 127.49. You've got the 21-day moving average coming up, 128.10. Your 9-day moving average at 129. We're already below that. We need to take this out. Alright, 128.60. We need to break this. I think we can do it. Look at the stochastics, look at the RSI. I can't see any reason for this going higher. Okay, that's me and the Euros done, so good luck. I will catch you all later on the desk.